2022 has been a rough year for the stock market. The S&P 500 index is down 13% so far this year alone. However, if you held one of these 5 ETFs, you could be up 115%, outperforming the S&P 500 index by 128%. That means if you started 2022 with $10,000 invested, instead of losing $1,300, you would have more than doubled your money in just 5 months, and your total portfolio would have gone from $10,000 to now $21,500. Stick around and I'll walk you through the top performing ETFs of 2022 so far. Hey guys, I'm Preston from Finance Mind, where I help you invest, make better financial decisions, and talk all things business. Given the absolute insanity of what's happening this year between inflation, the housing market, and a pending recession, markets have taken an absolute beating. Now, we're not officially in a bear market, which is defined as a market that's declined 20%, but we're pretty close. There is hope though. Despite the vast majority of sectors being down this year, there are still a few that have performed extremely well so far this year. As I review the performance of index funds, mutual funds, and ETFs, there are 3 metrics that I like to review and consider before making an investment decision. Number 1 would be past performance of the fund. Number 2 would be the investment strategy of the fund. How do they deploy their capital? What sort of companies are they invested in? How often do they buy and sell securities? And what sector do they primarily operate in? And number 3, which is something that's extremely important and a lot of people miss, is what are the fees the fund charges? There are 2 types of funds really. There's actively managed and there's passively managed funds. Typically, passively managed funds are going to be much lower in the fee structure and on average tend to generate as good, if not better, returns in the long run. So as we review each of these ETFs, we're going to focus primarily on those 3 areas. Now, I just want to be perfectly clear. I'm not saying that you should just YOLO all of your money and all of your savings into one of these ETFs and just pray and hope that it continues to do well. But I think it's really interesting to compare the performance of some of these ETFs so you can understand what has been working in a challenging market and what hasn't been. So let's get into it. All right, everyone. So here we are starting out at number 5 on our list, which is OIH VanEck Oil Services ETF. So number 1, let's go check out the year-to-date performance. So we have 44.31% right here year-to-date, pretty strong. Okay, next let's look at the fund description. What are they invested in? OIH tracks a market cap weighted index of 25 of the largest US listed publicly traded oil services companies. And then finally, we're looking at the expense ratio or the fees, and we have 0.35%, which is fairly low. And finally, just to give you a sense of what sort of holdings this fund has, you can scroll down here and see the top 10 holdings. So Schlumberger, Halliburton, some of the biggest oil and gas services companies we have here. Okay, number 4 on our list, we have JJN, which is iPath Series B Bloomberg Nickel Subindex Total Return ETN. Okay, starting off again, looking at the performance year to date, we have 61.53%. So extremely strong. And this fund tracks an index of single nickel futures contract rolled according to a fixed schedule. So nickel, as many of you probably know, is doing really well right now because it's a primary component of electric vehicle batteries. So Tesla and a number of the other EV companies are purchasing a lot of nickel, which has driven this price up. Then finally, we see the expense ratio or the fees of 0.45%. So a little bit higher than the previous one, but still not astronomical. Okay, now we're up into the top 3. So let's see what we have. In third place, we have UNG, or the United States Natural Gas Fund. And starting again with performance, we have 90.71% year-to-date returns. So almost doubling your money in just 1 year. The fund description for UNG is that it holds near-month futures contracts in natural gas as well as swap contracts. Expense ratio here is much, much higher. As we can see, it's 1.35%, which is definitely starting to get up there on the high end, but still not over 2%, which is where I would really start to be concerned. Number 2, we have UNL, which is the United States 12-month Natural Gas Fund. Starting off again with performance, slightly higher than the previous one at 92.23%. So again, inching ever closer to that doubling your money in just 1 year, which is absolutely insane. The fund description, UNL holds the 12 nearest month NYMEX natural gas futures contracts in equal weights. For those of you that don't know what NYMEX is, that's the New York Mercantile Exchange. It's where a lot of futures contracts and trading is done in commodities. And then looking over at our expense ratio, we see here it's 0.90%. Anything under 1%, again, is fairly good. Anything under 0.5% is really good. Okay, and finally, we have our number one top performing ETF of the year so far in 2022. We have GAZ, which is the iPath Series B Bloomberg Natural Gas Subindex Total Return ETN. A little bit of a mouthful of a name, but the performance definitely speaks for itself. So scrolling down here, we can see year-to-date performance of 115%. So again here, you're more than doubling your money in just a couple of months. The GAZ fund description here is that it tracks second month natural gas futures contracts, and the expense ratio is actually really strong here, just at 0.45%. Okay, so I had a lot of fun going through the top 5, but I also wanted to give you guys a little bit of a bonus answer, which is the absolute worst performing ETF so far this year, which is this one, PSIL, which is Advisor Shares Psychedelics ETF. So unfortunately, all of you who were bullish on psychedelics are probably crying a little bit right now because this has been struggling. Okay, looking at performance over the previous year, it's down 44, almost 45% over the last year. So again, if you had $10,000, you'd have lost about $4,500 of that. And a fund description here, PSIL is actively managed to provide exposure to the emerging global psychedelics industry. And the expense ratio, as we can see here, is 0.68. All right, guys, thanks for watching. I really hope you found that helpful. If you did, please like the video, comment down below, and subscribe for more. I'll see you in the next one.